who won and who lost this holiday season. Sarah Henry is a retail analyst with MFC Global Investment Management. She joins us from Philadelphia to discuss just that. And Sarah, thanks so much for joining us. We were talking briefly during the break, and you were saying that this Spending Pulse survey does tend to skew more towards online.
Absolutely right. And I think it's interesting that it sort of converges with the Amazon numbers we got from that company, in that they really reported some dramatically higher numbers on their peak day. 50%, over 50% bigger number in units sold this year, the year of the Kindle. They talked about more online books sold the day after Christmas than regular books. So this is a watershed moment for online sales. We're
looking at pictures of the Kindle here. I got to ask, because I noticed almost everybody besides me got a Kindle for Christmas. How much of that is fueling the growth at Amazon?
You know, I don't think it's hugely meaningful at this point, but, you know, we'll find out when they report earnings, and they'll hopefully give us more detail. But I think overall what it speaks to, if you look forward to next year and who wins, is that having that internet channel is a huge competitive advantage. And whether it's Walmart or Target, some of the more common longer-term names, those are going to win going forward, having that channel.
Do we see consumers out there with more trust doing online purchase, not only because of security and the money transaction, but also delivery on time and that sort of thing?
Absolutely, and I think this year and last year we had two big disruptive snowstorms, and that clearly drove a lot of sales through those channels. So this competitive advantage is translating to better sales.
I wonder about the 3.6% increase that MasterCard's Spending Pulse reported. How do you think that's going to compare to the numbers that you really care about that come out next week, the same-store sales numbers?
Sure, it's a benchmark for sure. I think myself, I am expecting a modest increase, not of that magnitude, but I would expect maybe a more muted comparison, given the brick-and-mortar stores are not all online, which is earlier in its corporate life cycle, and they will have, you know, I'm expecting equally positive numbers, but maybe not of that magnitude.
But you think the brick-and-mortar stores, Sarah, that have a strong online performance, such as Walmart, will do better than the others?
Yes, I mean, we've seen a major shift, a tectonic shift, I would say, in retail over the last decade, and this has been brought about by the companies that have spent money and capital in building out their infrastructure, whether that's an internet sales channel, global sourcing, merchandise planning, profit, markdown optimization. All of those are incrementally adding to profitability. So this is really separating the haves from the have-nots in terms of the ability to be successful and gain market share.
What about the discounters that we heard so much about going into this? I mean, a store like TJ Maxx, you also have among the winners. Are the big discounters really the winners this holiday season?
Sure. I think a value message where the consumer can get the brands that he or she are used to and trust, and still be assured that they are getting the lowest price is a win, a big win for a retailer. So if you combine that with sophistication on the infrastructure and a good message and stores that look great, I mean, that's the winning combination. So TJX definitely falls into that.
How about electronics retailers? I mean, was it a surprise that they did so well? Our Zara Burton got a television. Seems a lot of people got electronic equipment for Christmas this year. Is it a surprise that it was such a strong year for electronics retailers?
You know, it is a little bit of a surprise, but I think we have seen Walmart execute on this playbook of deflation, and the other retailers have gotten the message, and so have suppliers, and they have conspired to create an environment that has really stimulated demand. So the fact that they have made, for example, a GPS that sold for $400 a year or two ago for $100 this year, this has incrementally expanded the market for those types of electronics. So that's what's driving it.
Best Buy,
sure.
Best Buy, another one that you like, right?
Correct. Best Buy is a very unique business model at this point. They continue to benefit from the fact that Circuit City is out of business. And if you recall, this time last year, we still had quite a few Circuit City stores open. So now they are the Lone Ranger standing, and they have a really, I think, competitive advantage in terms of their ability to offer services and warranties and expertise in an evolving sophistication of consumer electronics.
Just quickly, last year, consumer electronics were also a huge part of the story, but so were those gift cards, and you think that we will see less popularity for gift cards going forward?
We are hearing some anecdotal information that gift cards will be lower this year than last. And I think part of that is that a number of stores, Circuit being probably the most high-profile one, have gone out of business, and people are wary of gifting gift cards to a store that may go out of business, whether there's reality to that or not. And I think there's also another theme of moving away from the most expensive gift to a gift that's more meaningful. Books certainly fall into that category, as we saw with the Kindle, but more personal items and lower ticket items as well.
All right. Hey, Sarah, thanks so much for spending some time with us today. Sarah Henry there of MFC Global Investment Management. Now we're